In this video, I will show you exactly which is the best area to take your profits if you are riding a trend. So if you are a trend trader, where is the best zone to exit the position for the maximum profit? So make sure you stick to the video until the end, because I will also show you a live analysis and I will show you how we can be looking for an actual capitalizing opportunity. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, so what I will be doing in this video is, first of all, answering the major question: how are you supposed to be setting your take profit levels? And then I will be giving you a full breakdown of GBPAUD, because it's a very interesting pair to be looking this week for a potential trading opportunity. So let's start by the first question: how you're supposed to be setting your take profit levels. Now, there are two main scenarios. If you have a market that is trending, the best way is to use Fibonacci levels to set your take profits, because you don't have structure, at least recent structure, to actually place your take profits. On the other side, if you have, for example, W formations and formations, so more of consolidation patterns, in that case, you know exactly where the most recent structure is, and you can use that structure to actually set your take profits. What do I mean for this? Let's say, for example, you have a market that is trending, okay? So creating lower lows and lower highs. You don't know where in this move to the downside you have to set your take profit if you're running a short. So what do? You take your Fibonacci tool and you place it from the high to the low of the retracement. And you have two possible targets in mind: the -27 and the -0.618. Most of the times, the market will reverse from these levels and start a retracement. Let's take a quick example of this. For example, we took the trade on EURZAR this week, the week that has just finished, and we capitalized on the move to the downside with students for a very good risk to reward. And where was our take profit? Our take profit was exactly at the -27 of the Fibonacci taken on the retracement. So from the high to the low of the retracement, few pips above, just to make sure that we can actually capitalize on the move. And we just closed the trade for a nice 1 to 3 risk to reward. But why exactly at the -27? Because, as I said, very often this is exactly the level from which the market starts a retracement. And just to show you, just to prove the point, where is the previous impulse, correction, and impulse? Impulse, correction, and impulse. Let's see why the market started the retracement exactly from here. Let's take the Fibonacci from the high to the low of the retracement. And you can see that the market stopped in between the -27 and -0.618, which is where the market stops most of the times. So if we were running a short on this trade, which we weren't really directly, because we didn't short EURZAR, but we had shorted USD ZAR, which obviously is correlated, our take profit as well was at the -27 of the Fibonacci taken on the retracement. So now you know if the market is trending. If it's trending to the upside, it's exactly same concept, just reverse everything. When it comes to having a pattern like, for example, W formation and formation, you know exactly where the take profit is, and we will now see it also with GBPAUD. You know exactly where the take profit is because you have structure. If you have a W formation, you know precisely that the structure here, so the previous resistance, which is now turned support, is your take profit level, okay? Because you have structure, which is now acting as support. So you want to be exiting at the most recent structure. You don't want to target lower, because you would be risking that the market actually bounces off the level and you just give all your profits back to the market, which, as you know, is never a good feeling. So let's go and make a full breakdown of GBPAUD now that we have cleared these simple concepts. Let's start our breakdown from the monthly time frame. Then we will go down on the weekly, on the daily, and then on the 4 hours, because always remember the best time frame for direction are the monthly, weekly, and daily, and the best time frame for entry is the 4 hour, where you can really snipe the market. And obviously we will also check at what we have from a COT perspective, so commitment of traders, what the biggest banks and institutions are currently doing in the market. So how are they positioned, basically their orders. So let's make the full breakdown. From the monthly, what we can see that the market has created a clear impulse to the downside. After an impulse, what do you expect? You expect the market to give you a retracement. Now, when it comes to measuring this retracement, where are you supposed to be placing your Fibonacci? From the high to the low of the impulse, right? So let's take a Fibonacci from the high to the low. And what we can see that the first Fibonacci level, so the 0.382, is lining up perfectly with a very strong supply area. In fact, in this move to the upside, there are 2 red candles, this one here and this one here, both structure levels. And since they are both structure levels, the market has very good probabilities to go and retest the levels to find the strong orders and liquidity that is inside of the zones. So in this case, this area here is definitely a good zone that the market is supposed to go and test, since we have the confluence of the resistance given by the supply zone and the 0.382 Fibonacci retracement. Perfect. Let's go down on the weekly time frame now, because on the monthly we have completed our analysis. Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to cover or analyze in the next video. So on the weekly time frame, what we can see? On the weekly, we can see a completely different scenario, because in this move to the downside, the market created one green candle, which is this one here. Now this is a level that the market, as we are speaking, is testing. Now this is just a quick trick that you can use to spot the precise resistance of a level. You can go and check what you have from a line chart perspective, and this will give you the closes in the market. And if you go and place a horizontal ray on this close, what you will see is that the market has already tested and respected this zone. But the simple concept, okay, we will just replace this by a green horizontal ray just to keep our charts as clean as possible. We can delete this, and actually let's make it a little bit more green so it's easier to see. So the concept that I want to speak about here is that this full body of the green candle is all a supply area. Okay, it's a strong resistance zone for this market. So we can't be looking for the market to go to our upside target until we will see a weekly close above this zone. So just to recap what we have seen up to now, from a monthly perspective, we have this upside target. However, we know that we have weekly resistance here. Clean chart, we know exactly what we have. Let's go down on the daily and see what we have. Now, from a daily perspective, situation is very, very interesting. In fact, what we know, we have the upside target, but we also know that this is strong weekly resistance. And if you look at the daily, there is one very important thing that you must notice. The market is approaching this very strong weekly resistance with an overextended W formation. Now, after an overextended W formation, what do you want to see? You want to see the market make a pullback back to the neckline of the formation. So as we said earlier, in this case, we know exactly where our target from a daily perspective is. Okay, it is the neckline of the formation. And we know where our upside target, overall upside target is, because again, it's structured from the monthly time frame, which we have already identified. So we have a short-term target here and a long-term target here from the monthly up here. So it's very simple how we will be approaching this with the students. But just before I show you how we will approach it, let's give a quick check at what we have from a COT perspective. So commitment of traders, what the biggest banks and institutions, so the non-commercials in the market, are currently doing, how are they positioned, and how their orders are changing. So let's go and get the data for the GBP. So what we can see for the GBP, we can see that we went from 35k net positions, so way more longs than shorts, with 76k longs and 40k shorts, to having way more shorts than longs, so a negative net positioning perspective with 63k shorts and 26k longs. But in the short term, what we can see is that the GBP has been getting stronger and stronger, with a lot of shorts getting closed and a lot of longs getting added. In fact, what you can see with the last report is that they opened another 5.4k long positions, bringing the longs at 39k, and the net positions clearly increasing from minus 36k to minus 16k. And if we go and see what we have from an AUD perspective, we can see that overall AUD is getting pretty strong. Okay, clearly we went from minus 54k to almost the same amount of longs and shorts, so a clear shift to the positive side. And in fact, AUD has been getting very strong against most currencies. Specifically, AUD USD has been in a very strong uptrend because the hedge funds have been longing AUD USD. So we can still expect some AUD strength. So the way in which we will be approaching AUD USD is very simple. Since we have an overextended W formation, we will be waiting for the market to give us the completion, because we definitely want to capitalize on the move to the downside. However, can we immediately just short AUD USD? Obviously not, because trading is reactive, not predictive. So we have to wait on the 4-hour time frame for proper confirmations before we can be taking any short. And no, a confirmation is not just one red candle or any candlestick formation, crazy things which make absolutely no sense. Candlestick formations are simply used by market makers to actually hunt your stop losses, okay? So don't use them to trade. They're not good confirmations. So we have to wait for proper confirmations on the 4-hour, because at the moment, everything is still bullish. Look, the structure of the market is absolutely bullish. So we cannot be looking for any shift. At least we need a break of structure, okay? So how we will be approaching this with students? The more the market will go up, the more the W formation will become overextended, the more the market will test the weekly supply, the better it is. Because when the market will actually be ready for the move to the downside, we will have a better risk to reward to the downside. So we will be waiting on the 4-hour time frame with students for the market to shift from a bullish market to a bearish market. And as soon as the market will shift from a bullish to a bearish market from a 4-hour perspective, we will add GBPAUD on watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside. And then again, inside of this area, we will be monitoring price action, waiting for the market, in this case, to shift from a bearish to a bullish market. And as soon as the market will provide to us one of our valid entries, we will be taking a beautiful trade to the upside with a very good risk to reward. And the market definitely at that point is supposed to have enough momentum to actually break the weekly resistance and reach our monthly target to the upside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.